What's good, everybody? Happy Friday. Hope you're having a good day today. Anything good? Please. Give me something. Somebody tell me something good. Leave a comment. Give me something good, because nothing good happened today. Well, not too bad, but I guess it wasn't horrible. We've certainly seen worse days this week, but that's going to be 7 straight days down. Right, we'll go over that in just a second, but if you're just tuning in, checking out the markets for the first time, we're financial advisors here at Jazz Wealth. We manage long-term retirement accounts and any long-term investment accounts that you may need help with, anything that's going on in your life that you might need financial advice with or help, or just want someone to help you with all that. Even your 401ks, happy to help. Anyways, we do this show every day, good, bad, or ugly, to update you on the stock markets, and today was an absolute ugly finish to an ugly week. We'll certainly cover it, but first I want to say, for those of you watching the replay or tuning in, thank you so much for watching throughout the year here, and I wish you guys a very Merry Christmas and a Happy New Year. We will be back next week, of course, but the markets do close early on Monday, and they will be closed on Tuesday. We're not going to do a closing beat on either one of those days because there won't hopefully be much to say, but we'll be back on Wednesday, and if I don't talk to you guys, I just wanted to say have a Merry Christmas. Thank you so much for watching, and really, really, really appreciate it. If you're one of our customers, we did a great class last night in Wine and Wealth about sector investing and where the best performance is relative to the volatility. Tried to introduce volatility a little bit to you guys as well, so be sure to check that out. Anyways, here we go. So let's do it, right? Quit stalling, Dustin. We got to get to it. We got to talk about this eventually. The Dow down about 2% on the day. The S&P down 2% on the day. The Nasdaq down 3% on the day. It really seems like a big deal, right? We've seen this time and time again. So normally this would be a pretty shocking day for the markets, but we've seen it all week. So a lot of you are getting used to what volatility can be, and we really haven't peaked. What's interesting is if you look at volatility, you happen to follow that, we aren't nowhere near the highs that we set back in February. And if you remember what happened in February, that was a whole different ballgame. So it's sort of interesting that volatility hasn't peaked. Anyways, I showed a little chart here off to the left. That's the markets for the day. I jokingly sort of referenced the plunge protection team coming out today, trying to help boost the markets. One of the Fed members did come out and he said, hey, look, we'd be willing to change our minds if the economy says something different. We would raise rates a little bit slower if something showed us that we needed to. So it made you kind of feel like, they're playing games here, right? They said they do listen to the market. They do pay attention to volatility, when just the other day they said the market is not something that they're really concerned about. So you got a lot of horrible just back and forth there, leading to a lot of uncertainty. And basically the market is looking for bad news. If you go back a few months, the market would look for any good reason to bounce. Right now, it's looking for any kind of negative reason to fall, and that's what you're staring at here. So we did start the day by 300 points higher on the Dow. Everything was positive, looking good. It was another one of those days where the sellers just beat it down little by little. No panic, no fear, just little by little they sort of pushed us down there. You had rebalancing today in Walgreens, Apple, I think Boeing maybe. So there was a handful of names that were getting their weightings reduced in the S&P 500. That leads to a lot of selling. Quadruple witching day, if you happen to participate in that. All of the options, futures, stock, and index options all expiring all in one day. That leads to a little more volume, but you can't blame that on the market's decline today for sure. Let me give you a few stats, and then we'll kick on over to the charts to show you what's going on. Okay, here's the research. You're not going to like it. The S&P 500 is currently having its worst December since just after the Great Depression in 1931. Horrible. It's the worst quarter since 2008, and you all remember what happened in 2008. It was not pretty. All the major indices, I'm going to switch over to the charts while we talk about this. All the major indices are down by 7 to almost 9%. Here's the Dow. You could see the day after day decline. Unbelievably crazy there. We now have 176 names down 20% or more year to date in the S&P. So just for fun, if you didn't watch this week, on Monday we said, hey, we're going to track this. Monday we had 137 names in the S&P 500, 20% or lower. By Tuesday we had 148 names. By Wednesday we had 150 names. By Thursday we had 166, and by today we finished with 176. That is still on record as the fastest acceleration in stocks that are down 20% or more year to date. So it's a record, right? When you see like the markets are falling, or if you're trading or you're investing and you go, why am I losing? Why is this going so bad? You can now tell the sort of rapid acceleration or the velocity of how we're falling here. Unbelievable, really. And then also, we hit high here. Let me go over here to the S&P 500. Here's the highs, right? So we hit highs back here on September 21st, right? The market has not fallen this fast, this far from highs since 2009. It's taken 65 days to go this far. That's a record. So it also gives you an idea. This is a rapid sell-off. This isn't people saying, oh, maybe things are going to get weak. This is people, aggressively selling here really, really quickly going into the year, and lots of different rebalancing, tax loss harvesting. We could go into lots of reasons why. I'd rather not. I'd rather just kind of focus on, I need something good. Give me something good today. And not Nike. So who's got something good for me? Leave a comment below. Okay, here's where we're going to go. We're going to go to consumer discretionary stocks. Wrong one. We're going to go to consumer discretionary stocks. They broke down to new lows today. They were higher, right? For the start of the day, they were not immune to the sell-off today. Nike was a big help, at least to start the day. Nike had earnings. We'll talk about that in a minute. Home Depot also helped in that space a little bit, but by the end of the day, you could see on the screen there, started positive, sold all the way off and became negative. Not a good sign there. Communication services, previously called telecom, that also broke to new 52-week lows there. A lot of that was Facebook. I don't know if you saw, Facebook had a pretty wild day today to the downside there. Communication services, by the way, now lower by 20% since just the start of October, and that's just here. Right, so if you look at a chart, that's just here. It's clearly been down a lot more since there. I just didn't go pull that up for you. Let me dig around a little bit because you had gold lower on the day, all the gold bugs that are like, hey, this is going to be great, man. I'm going to get some gold. The markets are going to crash. Everything's going to be good. Here's a quick lesson for you. If we go in a weekly time period, go all the way out here. Oh, no, I went too far. Hold on. I want you to just look at something real quick. Where's all the performance in the price of gold? The performance for the price of gold was during major market crashes, catastrophes, calamity, craziness. That's when gold saw a decent rally. Since then, nothing. Look at how flat this thing is. Years, by the way. If you can't see the bottom, I don't think. This is 2013, right where my cursor is. 2013, 2014, 2015, 16, 17, 18, 19. What do you need to know that gold is just not a place to be unless you think the world is really going to end? Anyways, that's what happened there in gold. I just wanted to point that out. That's a long-term price chart for you. If we look at the semiconductors, they stood no chance today. They made new 52-week lows. Oil made new 52-week lows. Banking stocks made new 52-week lows. You get where I'm going with this? I told you it wasn't going to be good. I was just going to give you it all today, man. Let's just put it all out there. Yeah. Communication services, we already mentioned, new lows. Retail stocks, new lows. Home building stocks, new lows. Oil service stocks, new lows. Consumer discretionary, we mentioned already, new lows. Metals and mining, new lows. There's no safe haven here, right? Transportation stocks, new lows. Banks, new lows. Regional banks, new lows. Mexico, not new lows. Didn't see that before. Healthcare, new lows, right? REITs, not new lows just yet, but almost there. Consumer staple stocks. Holy cow, right? Like we can't keep up with all of these here. So extreme discounts here in the short term, if you want to word it that way. And that's what we have there. Stock-wise, I told you I'd go through a few things. We got Nike higher on the day, great earnings, great revenue. The company even said all this trade war garbage going on doesn't affect us at all. That was the CEO's words, not mine. The stock was higher, but couldn't get above the 200-day moving average. It's basically right where it finished last Thursday. So last Thursday was here, right? They report earnings yesterday, which was Thursday. So in the last week, nothing's really happened in Nike. So it's exciting to see it higher today. Obviously, a great reversal day. But if you bought it last week, you're like, oh, okay. Like, that's good. Welcome back. So, oops. Okay, I'm going to get this. CarMax. There we go. CarMax higher by 4% today. Look, earnings was good. Revenue was okay. Came in less than expected. That's interesting. Revenue came in less than expected, but they're still selling more cars, they're financing more cars, and their overall profits are higher. People like that. That's always going to be a good thing there for them. So CarMax was a little higher on the day. I did want to cover Goldman Sachs real quick. That broke to new 52-week lows. That was like that from the start of the day, which really gave you that hint that the market wasn't going to get anything done. at least as far as the financials helping to support the markets. You got Malaysia wanting $7.5 billion out of Goldman Sachs for their role in the 1MDB scandal, if you happen to, or ruse, or whatever you want to call it, fraud. So obviously that's not good. That's going to be a long battle there. HPQ, Hewlett-Packard, and IBM, both 52-week lows today, I believe. They both said their systems were breached by Chinese hackers working for the Chinese government. Notice how the media is piling on to this Chinese hacker thing right as we work our way into the trade deal. That's not a coincidence. You got Lockheed Martin down 3.25% today. You know what? The defense names. Lockheed Martin got $1 billion contract to upgrade the F-16s. $1 billion just to upgrade the F-16, not to buy new ones, to just upgrade the ones they have. Holy cow. Raytheon was the other one that was in the news. Oh, sorry. I pushed H. There you go. Raytheon hit new lows as well. They got a $568 million contract. Not really big news. They're making a missile defense system for another country, for the Pentagon, and then they're going to sell it to them. So sort of like middleman thing going on there. Other than that, I'll comment on, I saw the JD.com thing today that guy's going to get let go there. I don't read into the thickness of that story. There could be something else going on there. I mean, that was kind of interesting how that happened. Stock's a little higher off that news. Of course, that's good news for that guy, I guess, if he didn't really do the things they said he did. You know what? And so here's the thing, tech-wise, if you're looking around, what was part of the main aggressiveness today? It was FANG stocks. FANG stocks and all the big tech. Facebook down, we talked about 6.33%. Twitter another 7%. Microsoft down 3%. Adobe 4%. Amazon 5%, almost 6%. Netflix down 6%. So you got those big FANG names. Apple down 4%. In addition to all the banks, they just killed the banks today. Very, very weak. All the way over to your credit companies, your Visa, MasterCard, all very much lower on the day. That's not helpful. That is definitely not helpful there. So know that it was just one of those weeks that we're all going to quickly try to forget, right? What do we got here? You're seeing a decline as a major buying opportunity since the recovery starts. So we talked about that. We've been talking about that to our everybody, our customers really, to kind of show them how long these things last, what's to be expected as far as a bottom, how does it shape, how does it work, and then actually this Sunday I'll be sending out another email to go over how far in the cycle is the market when it hits the bear market territory, meaning when we all officially agree the market is in a bear market, are we 10% of the way through the bear market? Are we almost done with it? Are we getting close? Are we nowhere near? You know what I mean? So what we did is went all the way back in time to kind of show you that. I'm probably going to make a video of that instead of an email. I think it'd be easier to explain. Got the whole graph and everything. But the bottom line is no hurry, Robert. I'll give you a hint. No hurry. Last day of school for kids. Gemmel, that's a good point. So all these companies, everybody that's been trying to adjust, it really seems like they did it this week. Any adjustments to tax loss harvesting, if that, on a grand scale, all the rebalancing, all the fund rebalancing, pension rebalancings. Hell, the CalSTRS guy was on TV like 10 times this week. I wonder how much they paid for that. Anyways, so all of that stuff seemed to happen this week because next week, all the big investors, all the big traders, all the big fund managers, they know there's no volume. Nobody's going to be around to accept their orders, so they had to get all the action done this week. And for that reason, the day after Christmas tends to be a small positive up day, and the entire week between Christmas and New Year's also tends to be small gains. So if it helps you to give you something to think about, so just know that next week everybody pretty much goes on vacation. So it may not be the most active market. Let's hope it's not the most active. So that should help Selena's comment there as well. Jimbo says he's always buying. Well, then you love the drops in the market here. Anybody that loves the idea of averaging in, of course you want to average in at a lower price. I will refer to my comments earlier in the week that said, as long as you're not needing the money that you're investing within the next 6 months to a year, great, right? This is a great thing that you're getting a discount on all this. Anything else in life, anything else on the planet, you want to buy as cheap as possible. But I get it. It's tough. Is the Band-Aid completely off yet? Yeah, the Band-Aid is off, and the person who we ripped the Band-Aid off of is currently screaming, going, you know, like, ow, right? Because we ripped it off so fast. So if that helps you. I don't know what's happening with that. It's a weird little glitch. Well, anyways, that's it. Can smaller tech stocks or any smaller stocks become bankrupt because of this bear market? Oh, absolutely. There can always be companies that go bankrupt, and currently is. I mean, look at Pier 1. Look at potentially JCPenney. I mean, there's lots of Sears. There's lots of examples of that, Henry. Mm-hmm. Yeah. Okay, well, that's all I have for you. I was hoping to keep this one sort of short today because there's not a lot of good things to say. You don't want to scare the children. Know that this is a rather rapid acceleration of the downside, and it's not going to recover itself right away. We talked about that last night to our customers in our Wine and Wealth class. Hopefully we get the idea. I'll be back on... we'll be back on Wednesday, actually. We had a little break here, so enjoy. If I can help you in any way, you know where to find me. If we have helped you in some way, maybe you'll hit the subscribe button for us as a little Christmas gift to us. I appreciate it. Enjoy the rest of your day. Enjoy the weekend. And again, thank you. Have a Merry, Merry Christmas. Happy, Happy New Year. We'll see you next week.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.